The MEREDA Index is a measure of real estate activity designed to track changes in Maine's real estate markets. The index is a composite of 9 seasonally adjusted measures reflecting both new development and transactions involving existing properties, and it covers both the commercial and residential markets statewide. This edition of the MEREDA Index comes in at 100.1. The MEREDA Index declined over the past 6 months by 2%, primarily because of declines in the commercial index. This edition of the MEREDA Index was filmed on location at East Brown Cow Management in Portland.
I'm Tim Soley, the president of East Brown Cow. I've always found the MEREDA Index to be a valuable tool. In fact, we in the real estate industry see what's happening so close that we don't necessarily have perspective on it. And for us to have a professional distilled statistic that gives us detail about what's happening, it's quite useful. I think that though we're late in the cycle and we see in Charlie Colgan's latest numbers a downswing in the commercial activity, that probably indicates the likelihood that there's fraying in the late cycle market. But that does mean that if one looks at long-term opportunity in Portland, that though there may be a noise in the process where from peak to trough, the market tends to react to the near-term realities. In the long term, the trajectory in Portland, I think, is quite strong. So in the late cycle of any market economy, there are edges which start to fray. In that sense, I mean that there are pieces of the puzzle that don't fit the general upcycle. In this case, that has come in through several different sectors of the market, which we've talked about, which include things like condos that might not be selling as quickly as they used to, small office spaces that sit for a couple of years. In fact, every time I hear at the top of the market, a broker will say to me, this time it's different. And I don't know, but it has never been different. Human nature is always the same, and it is never different. We are going into a cycle once again. When I describe what's happening in Portland, I'm really excited. It's everything from the retail activity. I see, national retailers, coming downtown again and bringing life to the street. I see Anthropologie. I see West Elm. I see, Urban Outfitters and Athleta moving downtown, and not because they're going here in addition to the mall or to Freeport, but because they're coming downtown. I see people coming downtown to live again. I see people on the streets, not just from 9 to 5 when the offices are open, but afterwards, to come to restaurants. And some of the finest restaurants in the country are here. And that's exciting for me.
The commercial market index recovered to pre-recession levels in 2013 and peaked in the second quarter of 2016. Since then, the volume of transactions and the total volume of building square feet leased and sold has been declining. The past 6 months have seen a sharper decline, primarily in the index for the number of sale and lease transactions, down 13%, and in square foot totals sold and leased, down 41%, although this index component is the most volatile from quarter to quarter. The index for commercial sales price per square foot declined nearly 10% over the past 6 months, after rising 3% in the last quarter of 2018. The index for lease prices per square foot has, however, risen by nearly 25% over the past year, particularly in the first quarter of 2019.
My name is Joe Porta. I manage Porta & Company Commercial Real Estate Services in Portland, Maine. The market is extremely active right now, and it has been for, I would say, the last 5 years. The interesting thing I think that you're seeing about the market now, where you didn't previously, is you're seeing a lot of new capital come into the market that historically was staying away from Portland. So what you're seeing is a lot of foreign capital come into Tier 1 markets, and it's pushing some of the more professional funds who used to operate in secondary and tertiary markets, and they no longer can make a return at a 4 cap, a 3 cap, or a 2 cap. So you're seeing them come in Portland and like some of the metrics that Portland has, some of the growth and the trajectory in certain asset classes. So they're coming in and they might not be excited about buying a 6 cap or a 7 cap, but you're seeing them like the trajectory of it, and it's a better opportunity cost than some of the markets that they were playing in before. We're at the tail end of a long period of economic expansion, so you've seen a lot of positive change in Portland's commercial real estate sectors. that are the result of that. It's hard to say that we're at the end of a cycle or at the downside of a cycle. We do know that we're late in the cycle, so there are certain things that we want to do when we're investing in commercial real estate assets in order to hedge our risk against the worst case outcomes that could be peeking around the corner after such a prolonged period of expansion. The multifamily asset class is where I expect to continue to see resiliency because we have low levels of inventory in our downtown with less than 12,000 rental occupied units downtown and less than 10% of those units having basic amenities like elevator, off-street parking, and laundry in the facility is why I think you'll continue to see these assets trade at low cap rates and rents still have some runway to go until you have a more adequate level of inventory in multifamily space.
In contrast to the commercial index, the residential index is showing a strong market. The index for sales of existing units dipped slightly in the last 6 months, down 4.3%, but all other components of the residential index showed growth, and even the existing units drop in the first quarter balanced a 4.8% increase in the index over the past year. The index for residential permits, single and multifamily, showed a 6.5% growth in the last 6 months, one of the larger 6-month increases in recent years. The index for mortgage originations for new purchases also showed solid growth, increasing 8.5% over the past 6 months and 7.4% in the past year.
Hi, my name is Elise Kiley. I'm a Senior Vice President and broker with Legacy Properties Sotheby's International Realty in Portland. The residential marketplace in the greater Portland area currently is very vibrant. It's very competitive for buyers. Buyers have a lot of competition. But what we're seeing now with the low inventory is that there are sellers who say, I will sell maybe in 6 months or maybe next year. Their concern is they don't have any place to go. They haven't finalized their next property. The solution is finding new housing inventory for those people that are almost ready to sell or are ready to sell. Their challenge is that they are not selling because they have nowhere to go. They're facing the same lack of inventory that the buyer of their home is facing. The solution is new construction, providing more homes that suit the current buyer demand. The challenge with that, however, is that new construction prices are so expensive, the cost has risen so dramatically that it's making that housing inventory harder to satisfy. I think what we've seen in Portland is that the hospitality industry has definitely been an economic driver, and I would say the commercial growth of new construction, commercial buildings is also a driver for the residential market. And I think affordability is going to be one of our challenges going forward. And affordability means different things to different people. And the city of Portland will define affordability based on certain formulas and metrics with the mean income. But the reality is we have a very vibrant downtown area, and that's what's drawing people to Portland. We need to make sure we protect that. It's very important that the people who are working in the businesses in the greater Portland area can afford to live either here or relatively close to here to make an easy commute. It has to be done in a responsible way, however, and it has to be a partnership between private and public sectors so that the solutions put in place are truly effective and not punitive to one group or another, but it's a unified solution with all stakeholders having a say.
The Construction Employment Index was up 3.8% over the past 6 months, but was unchanged over the past year. At 93, the index value at the end of the first quarter of 2019 is the highest value since the depth of the recession in the fourth quarter of 2009, when it dropped to 77.
I'm Richard Brescia, I'm with Chimbro, been there for 20 years now. What we see in the construction world over the past 18 months is there's a lot of dynamics happening in construction, especially in the state of Maine. Some of the drivers for the challenges right now are, include people, include materials, and include finding the qualified subcontractors or the trades within the subcontractors to be able to execute the work. And then the uncertainty around the economy, which is putting pressure on pricing. And this doesn't go back very far. You can go back 12 months and look at the pricing 12 months ago versus today, and there's an increase. It's putting pressure on projects that have used some of the older pricing to determine their economics and the viability of that project. New data is coming in, new pricing's coming in. It's really driving pressure on projects, and it's creating a challenge. Chimbro's on a continuous improvement program. We want to improve on everything we do. That dynamic of trying to continuously improve, how do we more efficiently deal with material management? How do we more efficiently deal with our people? How do we more efficiently deal with our schedules? Those things are going to help drive costs down. That'll offset some of the pressure that we're seeing in the pricing. So we're using modularization in addition to lean practices to be able to help offset some of the increased pricing that we're seeing. So we're taking BIM modeling to a new level. We're really taking that BIM modeling and figure out how can we maximize the work that's done in a shop locally, so when it arrives at the job site, there's less labor on the job site. There has been, appeared to be in the last couple of months, some sort of decline. Whether that decline gets us back into a normalization state where it's really good for the industry to have that normalization, or are we going to dive deeper? It's hard to say, what the outcome is going to be there. We do know there's pressures on both a local, state of Maine pressures on pricing, as well as economic pressures from around the world that are driving some of this trend. One of the ways to offset some of the pricing pressure that we're seeing in the marketplace is helping clients get to the best value. That best value is getting in early on the construction management process in lieu of going down the traditional method. That allows those clients to be able to make choices by providing them options around material options, execution options, planning options, schedule options. All of that, getting in early and helping those clients develop their projects allows us to get a better product and better value at the end of the day.
This edition of the MEREDA Index is supported by SMRT, Porta & Company, Chimbro, and Express Copy. Thank you to Dr. Charles Colgan for preparing this index and to the MEREDA membership for its continued support of MEREDA's mission.